In today's video, I'm going to share with you 5 major components that make up your FICO score and what they all mean. If you're new to the whole credit score thing, be sure to stick around until the very end of today's video because I'm going to share with you some tips and tricks on how to raise your score more efficiently so you can stay ahead of the game. What's good? My name is Caleb and welcome back to my channel. If this is your first time here, this channel is all about tips, tricks, and strategies to help you harness your potential, enhance your life, and invest in yourself. So for more weekly content just like this, please consider subscribing. And with that being said, let's jump right into the video. Now the first question you might be asking is, what exactly is a FICO score? A FICO score is a type of credit score used by lenders to help them assess how risky it is to let you borrow money or open a new line of credit. The FICO score is the most common scoring model used to assess your financial responsibility, but there's other types of scoring models too, like the Vantage score. Each of the 3 major credit bureaus use a slightly different version of the FICO score, which is why you might see several different scores whenever you check your credit report. The 3 major credit reporting agencies are TransUnion, Equifax, and Experian, and basically these agencies just collect your credit information and provide credit reports for lenders to use. For example, if you apply for a new credit card, the place that you're applying at is going to ask those 3 major bureaus for your credit report, and then they're going to grade you with a number, and this number is your FICO score. This number can range from 300 all the way to 850, and generally anything between 670 and 740 is considered good, and anything below 670 might make it a little bit more difficult for you to open any new credit cards or get a loan. If your score is below 670 though, don't panic because it's completely normal for your score to be kind of low when you're first starting out with your credit journey. If you're new to the whole credit journey thing, I suggest you check out one of my earlier videos about how to get your first credit card in 2020 and how to start your credit journey, and I show you exactly how I got my credit score from under 620 to over 750 in just 1 year. Also, real quickly, I'd just like to mention the major difference between the FICO score and the Vantage score, as I mentioned earlier. Basically, the Vantage score is just a single score that you get from all 3 credit bureaus combined, whereas the FICO score is specific to just one of the bureaus. So if you check your credit report with all 3 agencies, you'll either get one Vantage score or you'll get 3 different FICO scores, but each of these scoring models use the same exact range from 300 to 850. Now, what things impact your FICO score? Okay, so we just learned that there's 3 major credit reporting agencies, each with their own version of the FICO scoring model. We also learned that other than the FICO score, there's other scoring models too that these agencies can use, like the Vantage score. But since the FICO score is the most common scoring model, what are the 5 things that impact this score? The first thing is your payment history, and this contributes to 35% of your FICO score. This takes into account whether or not you've made all your credit card payments on time, and also how consistent you are with paying off your debts. This includes things like credit card payments, cash loan payments, car financing payments, and also mortgage payments. This also factors in bankruptcies and any time you've defaulted on a loan and had something go to collections because you didn't pay it off in time. The second thing is how much you owe, which is considered to be your credit utilization ratio, and this contributes to 30% of your FICO score. Your credit utilization ratio is just the percentage of your available credit that you're actively using. So for example, if you only have one credit card and the credit limit is $1,000 on that card, but you've only spent $100 on it, then your credit utilization percentage would be 10%. If you have a bunch of different credit cards and loans, your credit utilization accounts for all of those different things combined, and lenders usually like to see a percentage that's 30% or lower. If you want to grow your score and go the extra mile, my personal recommendation is to keep your utilization between 5 and 10%, but of course the lower the better. The last 3 things that impact your FICO score would be the length of your credit history, any new credit lines that you've opened recently, and the different types of credit that you have available to you. The length of your credit history contributes to 15% of your FICO score, and this is just the average age of all your lines of credit. This means that the longer you have your credit lines open, the better your score. This is why I always recommend to get credit cards with no annual fee, because even when you bring these cards back down to 0, there's no real reason to close the account, and so this helps keep your credit length as long as possible. Opening new lines of credit contributes to 10% of your FICO score, and this is why I recommend to not open too many credit cards in a short period of time. Most of the time when you open a new line of credit, they perform a hard credit check on you, which is also known as a hard inquiry, and a hard inquiry is going to stay on your credit report for 2 years, even though it only impacts your credit score for 1 of those years. This isn't a huge deal, but you're going to lose a couple points temporarily every time you open up a new credit card or get a loan. It seems like a lot of people online recommend to only open up a card every 1 to 2 years, but in my personal experience, you're going to be totally okay opening up a new card every 3 to 6 months, as long as you don't plan on using your credit score for something big like financing a car or buying a new house in the next like 2 to 3 years. The only thing is, if you're going to take a more aggressive route with credit cards like this, you must know what you're doing, you must have a plan, and you must do do your research first. Personally, I've opened up a new credit card every 4 months for basically the last 2 years, and my credit score has barely been impacted by this, but that's because the order I did things in and how I did those things. So if you'd like to see a video more in depth about my personal credit journey and how I got my credit score to where it is now, please leave a like and comment down below so I know that you want to see that video. The last thing that impacts your score is how many different types of credit you have available to you, and this contributes to the last 10% of your FICO score. Lenders really like to see a variety of credit in your credit report, which means that your score will increase faster when you have a combination of multiple credit cards, cash loans, car payments, and mortgages all on your credit report. In other words, if you have like 20 credit cards open and nothing else, it doesn't look nearly as good as having only 3 to 5 credit cards, but also a car payment and a mortgage. Having multiple types of credit available to you helps to show that you're really fluent at handling multiple types of loans at the same time and that you can be responsible about it. Okay, so your FICO score only reflects things that are in your credit report, but there's actually some things that are left out of this. It's a common misconception that your rental history has an impact on your credit score, but it actually has no impact on this at all. On the other hand, applying for a place to rent has an impact on your credit score because this is a form of a hard inquiry, but the act of paying rent itself is not going to impact your score because this is a lease and not a loan payment. To learn more about what a lease actually is, be sure to check out my Finance Terms Explained playlist down in the description below. I'll be posting a video about what this word means in the near future, and I'll be explaining how a lease, a loan, and financing plans are all slightly different. Anyways, going back to what I was saying, your income and your length of employment also have no impact on your credit score either. Sometimes, depending on the situation, a lender will look at your rental history, your income, and your length of employment, but all three of these things don't impact your FICO score directly. So, what are some tips to improve my score? Alright, so if you stuck around in this video so far, you're probably curious about what my tips and tricks are to help increase your credit score more efficiently, so let's talk about that. The first tip I have is to absolutely never miss your minimum payment and try your best to pay your balance all the way down to 0 before the billing cycle ends every single month. If you miss your minimum payment, it's going to stick on your credit report for 7 years, and this is one of the worst things you can do to your score. But on top of the minimum payment, if you can get your balance all the way down to 0 every month before the billing cycle ends, the credit reporting agencies are going to view your credit utilization as being basically 0 all the time because lenders only report to these agencies once a month. This leads into the second tip, which also regards credit utilization, and this tip is to ask for a credit limit increase every 6 to 12 months for all of your credit cards. This is pretty simple to do, but if you have a good track record, generally lenders have no problem bumping up your credit limit a couple $100s, and because of this, your credit utilization is going to automatically go down as long as your spending remains the same. This means that you'll have a lower credit utilization for basically no effort at all. This is something I actually did recently to all of my credit cards, and all of my credit limits went up by almost 50%, but because my spending is exactly the same, my credit utilization went down significantly. Going back to the $1,000 credit card example, if you spend $100 on this card, your credit utilization would be 10%. But if you ask for an increase and they increase it to $1,500, but you still are only spending that $100, then your credit utilization goes down all the way to 6.6%. My third tip is to open new credit cards strategically and to not close any of your oldest accounts. Your average credit length is based on the average age of all of your open accounts, so if you close any of your oldest accounts, it's going to make your average age go down. Once again, this is why I recommend opening cards with no annual fee, because when you move on to your new card, you can just keep the older card open and it's completely free to do this. And this is a brainless and simple way to keep your average age of credit as high as possible. Not only this, but closing your oldest accounts will cause your credit utilization percentage to go up because you no longer have this credit available to you. A few of my oldest credit cards are pretty much ones that I never use, but I keep these open because if I were to close them, then my average age of credit would go down by almost 50%. And since your length of credit impacts your score a bit, I thought this would be important to mention. Now, I know a lot of this credit score stuff can sound complicated, but it's really not, and the longer that you're in the game, the more you'll gain an understanding of it. If you're curious about the credit cards that I use, I'll be sure to link 2 of my favorite cards down in the description below with referral links, and if you're interested in learning more about credit cards and banking, be sure to check out my playlist for that down in the description as well, and I'll also leave it up in the top right corner for you. If you found this video helpful, make sure you tap that like button so YouTube knows to recommend this video to others, and also hit that big fat red subscribe button down below with the little notification bell next to it. That way you get notified every week when I release a new video. If you have a question about anything I talked about in this video, be sure to leave a comment down there as well, and I'll get back to you as soon as I can. I wish you all the best of luck on your credit journey. Just make sure to do your own research and make sure you make the smartest decisions for yourself based on your own unique situation. With that being said, thank you all so much for watching, and I'll catch you in the next one.